I'm Corbett Wall with DV Auction, here with your 3-minute cattle market update for Wednesday, January the 18th, where we're going to take a look at those 2016 fat cattle trade results that we've been waiting for and finally got here in the new year. But before we do that, let's look at the board for the early part of the week on live cattle futures. Let's move to the April contract. That's where all the trade's happening right now. Of course, Monday was closed due to Martin Luther King Jr. Day. Tuesday was up $1.07 to end the day on Tuesday at $1.19. February spot fats on Tuesday were closed at $1.1957, which is almost $1 higher than what the cash weighted average come in at for last week. Feeder cattle futures on the March contract closed Monday. Tuesday was up 75 cents to end the day on Tuesday at $130.50, and that's a couple dollars back from what the CME index is and the real-time index. But look at fat cattle trade for last week, just last week, the weighted average on there on a little pretty good trade there on the high side of really what I thought we was going to have around 80,900 there, and that's pretty good because we really didn't have anything all week until after hours on Friday, but they had a pretty good trade there on Friday, and it was higher. Steers averaged on the live basis 118.82, which was up $1.15. Dress steers averaged 189.75, which was up $1.78. But let's look at that fat cattle purchase type breakdown. I'm talking about the way that the fat cattle were sold, which is very, very important to the health of the industry as a whole, especially the fat cattle market and our whole way of doing business in the cattle business. But well, I want to thank Market News, USDA Market News, and especially Lonnie Peets for sharing this information so we can get it out to more people here. But they're in St. Joe, Missouri, and couldn't get this information without mandatory price reporting. That's the way most of this information comes in. But I'm talking about the breakdown of how the cattle sold. You know that we need negotiated cash trades to keep a healthy market. We need guys to haggle on cattle. We need the packers to come in and show demand for cattle and not just have cattle that are already promised to them for out front. But if you look at the breakdown between how much percent of the total volume sold cash, how much on a formula basis, how much forward contract, and how much negotiated trend or negotiated grid. And I hate to say I told you so, but I've told you guys the whole last half of 2016 that this was going to be the first year in forever that we had more negotiated cash fat cattle trade as a percentage than we did the year before. And that absolutely was the case. It was not only more volume because we had so many more fat cattle to sell, it was a bunch higher on the percentage of the total volume also. But if you look at 2016, we had 26.3% of the total fat cattle that sold in the 5-area feeding region that went cash. And I know that doesn't sound that great. That's only a little over a quarter of them. But it was 26.3% compared to 21.3% just last year. And can go back 10 years and it was 52%. But you look at in 2016, the formula sales were at 59.4%. There were the lion's share of your fat cattle sales. Forward contracts were down a bunch, 11.2% compared to 16.7% just 2015, and negotiated grids were about the same at 3.1%. But that's something that's really healthy for the fat cattle market, and it's healthy for the cattle business. It gives us a little bit of hope because we've just been on a downhill slide on these ever since they started keeping track of them, ever since they sold 100% of them back on the bricks in the old stockyards. But it's exciting for me to see that happen. Makes us feel like maybe guys are thinking maybe we shouldn't give these packers all this captive supply. It makes me feel like maybe the packers don't have 100% control of the market and what's going on. And it's really, it gives everybody a boost, and I think it's so much more important than what you just see on the surface. But you look at a breakdown due to and the 5 areas there. One thing that's kind of depressing is you look at Texas, and as a total as a percentage of the total of fat cattle sales in the whole Texas, which is mostly just the Texas Panhandle down to Lubbock or so there, but only 6.4% sold on negotiated cash basis. But if you look in 2015, it was only 2.6, so we made a big jump there. Kansas ended up at 23% of their sales were negotiated cash in 2016, which was about double what they had in 2015, which was 12.5%. Nebraska's at 42.1% compared to 32.6%, and Colorado 13.8% of their total sales were negotiated cash compared to just 8.3% in 2015. The problem is Iowa, Minnesota, southern Minnesota there, they were kind of holding things together. They were selling the majority of their cattle on a negotiated cash basis, and in 2015 it was 56.7%, but it actually fell in 2016 to 50.9%, but still the biggest by far of the 5 area feeding region. And those are the guys that have the least amount of contact, the least amount of leverage. Most of them are farmer feeders or feedlots that are really spread out. They might call it one feedlot, but they might feed cattle in 4 or 5 different spots, and they don't have a whole lot of cattle on the show list, and it's hard for them to really negotiate hard. And but they still sell more cattle negotiated cash because there's so many of them and they're spread out. But the big corporate packers and corporate feeders aren't as heavily concentrated up in that area. It's still a lot of individuals. But now let's look at some feeder cattle markets. All the feeder cattle markets early in the week were just running on light receipts because of those wet conditions we had over the weekend. And we didn't get as much freezing rain as what everybody thought. It wasn't a big disaster everybody thought with power lines down everywhere and all that kind of thing. But we did get quite a bit of moisture, but in most areas the temperature stayed warm enough that it didn't cause a big mess. It was just a lot of really good moisture, and every drop of it soaked in. I tell you what, all through the Texas Panhandle, western Oklahoma, all going up through into Missouri, and they just had some really good moisture, but it made muddy conditions and kind of miserable over the weekend, and guys didn't really get out and get their cattle up to sell them in the sale barns early in the week. Oklahoma City stockyards only had a little over 2,700 head, not well tested is what Market News called it, but if you looked at the prices, they were sharply lower. The few 8-weight steers they had only averaged around 126, and the 7-weight steers only averaged around 130, 175. Well, we know that's a lot lower than what every place else has been selling, and a lot lower than what they had last week, but they said a few sales mostly steady. That's kind of what we used to do in Market News when you didn't have enough to really jump up and down on, but it was sure enough lower. Joplin had 2,650 cattle, and they did go ahead and call their market lower. Steers $4 to $7 lower. Heifers are kind of uneven, but really on a light test there. But really didn't have a good test of the market, and we're looking forward to today here on Wednesday so that we can see El Reno, Oklahoma. They should have enough cattle and some more sales up there in the middle of the week. We'll get those good Kansas tests, and we can really see what this feeder cattle market's doing. But that's 3 minutes, and we'll talk to you on Friday.